Let me move on and let me talk about what's in focus in today's trading session. Like Alex mentioned earlier as well, that on BNSN Lens we will be discussing crude, the crude market, what's happening. We all know that the oil is on a boil. Company-wise impact, if you look at it, BPCL, every $1 per barrel increase in GRM increases the PAT by about 14 to 17% for BPCL. IOC, every dollar increase in the GRM increases their PAT by about 17 to 22%. ONGC, every $5 increase in Brent prices increases their PAT by about 10%. Reliance Industries, on the other hand, $1 increase per barrel change in the GRMs increases their PAT by about 4 to 5%. Asian Paints, another sort of industry that has crude as a derivative. So for Asian Paints, 5% increase in TiO2 prices, a major raw material for that particular company, impacts the FY23 PAT by about 12%. So this is how we will see the impact of crude prices. But my colleague Mubina is here to take us through as to why is the crude oil on the boil and what's exactly happening on the OPEC Plus front. Mubina.
The OPEC talks have once again failed. The group has once again found itself descending into infighting, but this time around the cause of the infighting is not Saudi and Russia, but long-time diplomatic allies Saudi and UAE. Now remember that the group was supposed to meet to decide on the production policy for the upcoming months. In fact, they were very close to increasing production as well, to deciding on increasing production by 2 million barrels per day from August to December. But the one key factor that UAE was against was increasing the period of the current production policy from beyond April 2022. Remember that the deal currently that binds all the members of the OPEC together to heed to a certain production quota is till April 22. Now, UAE did not want that extended beyond that month and year. The Saudi was very keen to push the policy that binds the group together till the end of 2022. Now, this is not the first time that the UAE has vociferously voiced against certain terms and conditions put down by the most stronger members, Russia and Saudi. In fact, the Emirati minister was also quoted as saying that it's high time the UAE gets better terms and conditions for itself. Now, while of course all of this, these diplomatic standoffs really are problematic, and the cartel really will have to find its feet once again, look at oil prices in the meantime. It's not surprising that we've hit $77 per barrel, because we are going to be looking at a very, very tight market. Since the production policy has not been increased, the output cuts of 5.8 million barrels per day are going to be continuing, and that too at a time when demand is expected to pop up by at least 3 million barrels per day, especially in August. It's not surprising then that Brent has popped so much, heading in fact even towards $80.
All right, that's the context. Let's get on board our two experts. We've got Kunal Bothra as well as Saurabh Jain joining in. Good morning to the both of you. Kunal, I want to start with you. Crude oil fluctuations are par for the course, but this time we seem to be heading significantly higher. The possibility of 100 is being discussed by a few people. What are the stocks that you think will be watched out for in the next couple of days and weeks ahead?
Absolutely. So, Alex, good morning. First of all, very interesting discussion. Crude has been on an absolutely stronger trajectory in the last 13-14 months. Specifically at a time when in the month of March 2020, you had crude derivatives going into some deep negatives as well. So from there on, it's been an absolute turnaround for this asset class. Now on the Brent crude as well, the asset class has been hitting the levels of 75 plus quite consistently. And I believe that this is a very stable uptrend for the asset class. But one of the stocks which I want to discuss is SpiceJet from the aviation pack. Now we've all keep on discussing names like Indigo, Interglobe Aviation, from the aviation sector. But I think SpiceJet is the one which is looking complete, more or less like a complete turnaround as such in terms of charts. I've marked up a couple of important data points from the charts perspective. One of them is the shaded region where the stock has been consolidating. So the last 1.5 or 2 months, It's been in a range of 70-75 as a lower end and closer to 80 as a resistance band for the stock. But the MACD has given a breakout in the last 3 or 4 occasions. Whenever such a breakout has happened, we've got an immediate spike in the stock price in the near term. So I think if that's something to follow, we could be expecting a big breakout on SpiceJet over the near term, and which is why I picked up this stock, because this stock as well gets a lot of affected by the rally in the crude oil prices. But the charts are showing that SpiceJet could be one of the few mid cap names which can break out from the aviation pack.
All right, good morning, Saurabh. What's your view coming in on the sectors that will be actually impacted or rather stand to benefit from a rise in crude oil prices? If you talk of Aam Aadmi, definitely we are not the ones who are going to benefit out of rising crude oil prices. But according to you, which are the sectors or which company stands to benefit or stands to lose from the rise in crude prices?
First and foremost company which comes to my mind is from the oil exploration sector, the PSU or NGC, the bigger name. The current prices reflect the average $50 per barrel kind of valuation. And I think the way the crude prices is rising and the way the forecasts are coming this year, the average prices will be, I think, more close to $75 to $80. And going into next year, 2022, I think the prices are likely to be much higher. So considering the buoyancy in the crude prices, I think the clear beneficiary stands out is the ONGC. I expect minimum 20-25% upside from the current levels. And there are various industries which will be negatively affected in terms of the higher energy cost. I mean, from the logistics to tire companies to the paint companies. It depends upon how the demand pans out for these companies and how much they are able to push up the prices because of the hike in the raw material price. Besides, the consumers are continuously getting affected because of these lockdown and restrictions on the mobility. Everybody is going down from using its own vehicle, which is adding to extra expense on the pocket.
All right, Saurabh, that's fantastic. You put things in context. In fact, we have to slip into a short break, but on the other side, we'll be taking all of the viewer queries that are already streaming in. Do stay tuned.